Yes, absolutely.
Where is it?
Go out that side of the door over
And then
there.
around?
It's on the left. Yes, it's on the opposite side.
This story's a little tricky, so.
What? Hey, how are you? Doing good. Feeling better? I can say happily as of today, I'm better. I love your red.
You know me, I'm always red somehow, shape, form, and
You're looking good, chickadee poo, looking good.
You get to make it to the alcohol office today. What's happening in there?
I actually wasn't there
You
either.
weren't?
I was crawling under houses today, so.
Oh my goodness.
And I didn't think I'd get cleaned up in time to get here, but I did.
It's a glamorous life being a real estate
Isn't
agent.
it? Yes. Yeah. I wanted to make sure nothing
It
was
is,
wrong.
try
under
being
there.
an try being a fix and flipper.
Oh, yeah.
That's really fun.
Yeah.
Yeah, the $1 million listing show makes it look so glamorous.
Okay. I'd like to see Josh Altman under a house.
Yeah, exactly. What are y'all seeing in the market right now? How are things looking?
I'm
Business picking
very
up?
busy. Yeah,
Good.
I'm not slowing down at all.
Good. Good. What's the bulk of your business? Is it single family?
It's single family, and now it's been, as I drive, I always go a different direction, and I have my notebook next to me, and I say, oh, that house looks empty. So I make sure to see where I am.
Yeah.
I go home, pull up the tax information, make sure I can call them, and that's where I'm getting a lot of mine.
Yeah.
They don't even realize what they have.
Right.
So that's where mine are coming from, and the referral from families.
Yeah, I was walking my neighborhood, walking my dog, and I was just like, oh, dumpster. Okay, right. Whatever it is, it's in the driveway. It's like,
Yeah.
opportunity there. So someone in my neighborhood just turned out something.
You're old?
She was really like on it with it, healthy, like she's not like 100 years old.
Yes.
Like, she probably still in state. Hey,
Came up
what's
on
next for you? Thinking about staying here a while? Or I don't know.
Can I help you pack? When's your expiration date?
Can't be that direct.
Time's not on your side.
I love it. I love it. I love it. Getting old, really?
That's right. Oh, shoot.
That's funny.
Oh, the things that go on in your head that you can't say out loud.
I know.
But then you're me.
But yeah, then there's Katrina, who actually says what she's thinking.
And if I don't, you see it on my face, I might as well just.
You might as well say it anyways, exactly.
This is like, you wanna get how much for this? No.
No.
Or have the client that says, I wanna offer this, and I said, not gonna respond to it. It's too low.
Yeah, don't be surprised when we get crickets.
Well, so they gave me a little better price. I said, well, then we'll get a counter with that, so.
Yeah, we're still not gonna get this, right?
Not in those
He's
budget
not
days.
Oh, yeah. Just like, are you serious?
It's all on here.
So it's just like the guy that did my price.
This is nice.
They get the listing. It's not myself or what I sent to me. Somebody else is gonna buy the listing. But they want me to represent them on the buy side, so I'm doing that side. And I said, son, what do you get, Chris?
Yeah, his mom's.
There's not a video link or anything to
His mom's
today,
got
sir.
the land
There's
in
not.
her name now.
Jennifer said she can't get you on this phone.
Okay.
But he thinks he's gonna do.
So I just turn my phone on. Call her when I hear.
FaceTime.
We'll do that, it's fine. Yeah.
I have some concerns.
We
She's
are
my
gonna
second
do,
person.
we are gonna do a,
Right?
like something we can send out via link. our slides and present to them as part of it.
Oh, okay, well, that'll be easier for her.
Cause I was
Yeah.
gonna be like,
I'll let her
yeah,
know.
it is.
Okay.
And now I'm sitting back on,
I said, you should have just taken it because you never
You're
know.
recording.
Yeah, this is a little different.
It's gonna record.
This is, there's another one that I didn't take either, and I told the seller, I said, it's been a long time since I've been in the sparring contest with the sellers. And I said, do you think there's a reason that 5 people told you to call me? 129 days later, because somebody else listed it for what they wanted, and I said, it's still sitting.
All right.
129 days later, still sitting there. In this market?
Good afternoon. How's everybody doing?
good.
Good. Thank you for coming today.
Oh, we got another
Coming in.
group, come on
Find
in.
me.
Come on in, guys, hey.
Yeah, the off-ramp was terrible.
Was it class? Stragglers come in.
You come to class?
What's going
Oh,
on?
sorry. I was gonna educate you on girls' day. They're customers.
There might be, yeah.
They might wanna be investors too.
All right, everybody, welcome. Thank you for coming. I believe I spoke with every single one of you on the phone, and it's really the people I've spoken with on the phone who got invited to this. So I wanted to just keep narrowing this down to the people who are really interested in doing something. We're going to introduce ourselves in just a second, but we're going to talk about Red Label Investments today. And go to the next, if you can go to the next slide there, that'd be awesome. So here's who we are. Myself, Sharon Lane, William Morris, and just a little bit about us, just so you can kind of see a track record of what we've been doing. Most of you know who I am and Sharon, and some of you know who Will is. I'm the operating principal in the Maryville office. I started out here in this office and was an agent and team leader. Helped us get to the top 100 most profitable market centers in all of KW. 15-year KW associate, and have been part of Gary Keller's top CEO mastermind. Sharon Lane, the buck stops right there with decisions and what happened. She's the franchise owner of Keller Williams Greater Knoxville, so she owns the entire organization. Prior to that, Icon, legendary agent in real estate, with a different company, we won't say who that is. And also the top profitable market center. She is fondly known in Keller Williams world as profit sharing. And we love that about her. She watches every dollar. She won KW Home Run Launch when we first launched this office back in 2008. You guys remember what that market was like? And we launched Keller Williams in that market and won the Home Run Launch, most successful office in the entire company. Also, she's in Gary's top OP mastermind, so she gets to go hang out with Gary, was it like once a quarter? Once a quarter? Yes. And also a black belt team leader, which is a recruiting award. Will and I have been business partners for several years now. Will was actually Keller Williams associate for a minute, and then quickly saw the value of larger commercial, multifamily, and things like that. But I'll let you kind of tell a little bit about yourself, Will.
Yeah, so basically left here, started my journey in towards multifamily, and quickly found my place in raising capital. From there, I was able to work my way into getting in and actually doing some of my own syndications in multifamily, and since then, transitioned into multiple different sectors from growth equity, real estate growth equity, and even venture capital.
Yep.
Licensed contractor, still develop on a small scale, and then a lot of failed attempts, but I actually had a few successful startups and exits in my own companies as well.
Just like Gary says, we get to learn from our failures and our successes. So we got both of those going on, don't we?
We're not here for failure.
Yeah, that's all right. That's all right. I'm just saying we got all those out of the way, and the gray hairs. Look at that.
Very much so.
All right, we'll go to the next one. What are we doing this for? We have a wealth building vehicle for Keller Williams Associates. Red Label is designed to help KW Associates fulfill the lives worth living and legacies worth leaving parts of our mission statement. In line with the belief statements, we believe together everyone achieves more. So you know we have profit share. We also teach people how to hold and flip homes and things like that, all kinds of ways of building wealth. Sharon, I'd love to kind of share with you your vision and purpose of wanting to do this for our associates. If you
Yeah,
would.
most of all, you know my story about Keller Williams. How I came in as an Asian investor 15 years ago, became team leader, and became an OP, and then we started growing offices. I will tell you this, that I was a realtor for many years before I came to Keller Williams. I was with 2 other companies, and I would go sell houses and take my check, spend it, go sell more houses, take my check, spend it. It was not until I came to Keller Williams that I learned about wealth building. And I'll have to tell you, and I'm gonna share this, I'm not ringing my bell, but I married a doctor 43 years ago, okay? So I've had a very good, blessed, very nice life. However, he was a workaholic and I was a workaholic. We had no children. So during that course of time, I didn't realize that I didn't know what I didn't know until I came to Keller Williams. And in the last 15 years, I was telling Jay today, I have built my own wealth. So my husband has been retired for a long number of years. Our situations have reversed. I am now the breadwinner and I support my husband. So life flips, and I know that Jenny Snodgrass, who has the Women's Wealth Building class, has done that with her husband too. So we never know what's gonna happen in life, but I am like, I told Jay, I said, I want people to be able to start to build wealth for themselves, to understand what money is really about and how you get there, because you actually, we used to call it OPM, other people's money. That means using money from the bank to build your own wealth. So I think this is gonna help you all. Our goal is to help every agent become a millionaire within Keller Williams, and I will tell you that I have done that on my own. I have become a millionaire through Keller Williams. I say that only because I want you all to know that if I can do this, you all can do this. And you can do it in many, many different avenues, many ways. One other thing I want to say before I exit to my next meeting is that you need to understand streams of income. You need to have more than one stream of income. When I worked for so many years as an agent, that was my only stream of income. I didn't even think about what I needed to do to build avenues, because when this goes down, you can count on this, you know? So anyway, that was my purpose of helping Jay and joining Will to do this for our agents. So we want to help you all build your wealth, and our goal is to help all of our agents become millionaires.
Thank you, Sharon. That's
Okay.
right.
All right, guys, thank you so much.
And you know, part of what Sharon said there, I think is key too, is in addition to building wealth, like this is an education platform too, right? You know, I remember when I invested in my first single family flip and hold, like I was so terrified. I was like, oh, I've got to be ready. I've got to have this, got to have this. And then I had a really good mentor, Gene Rivers, who most of you know. He said, if you don't go out and buy one tomorrow, I'm not going to talk to you again. I was like, okay. I like having my coaching sessions with Gene Rivers, so I went out and bought one the next day. And then I was like, oh, okay. So once you kind of dive in and do it, you start figuring out how it all works. So this also could be an educational platform for you as well, going in there and making it happen. So, all right, let's go to the next slide. Please.
I'll add something real quick, just to add on to what Sharon was saying, is by stepping out the way I did it and really just going to go gun ho and do it myself. I wish that I had somebody to join up with and show me the ropes. It's a much easier path, I will say that.
Yeah.
So that's one thing I'll add based on her.
Yeah. Talk about a few definitions here, because this is part of the education part, right? You're going to hear these terminology used out through what we're going to talk about today. You're going to hear general partners. So what does that mean in this situation? They play an active role in the company's daily operations or as a managing partner. The general partners in this organization is myself, Will, and Sharon. We have limited partners, also known as a silent partner. They're not involved in the daily operations, has limited liability for the company's liabilities and debts, and limited to the amount of their capital committed. In this instance, it's going to be our Keller Williams associates who choose to invest in the fund. Does that all make sense? Mm-hmm. Okay. And the limited part really, like it talks about, you're limited to the capital that you put into the fund as far as what your risk for. a management fee. There is a management fee, we're gonna talk about what that is here in a minute, but it's there to compensate the managers for their time and expertise in selecting investments and managing the portfolio. Fund expenses, so there are gonna be expenses in each fund. We have legal, administration, tax prep, audit fees, cost of setting up and run a real estate fund, getting your LLCs, your operating agreements in place, all of that. What's that?
K1s, your
Yes.
tax papers.
Yeah. Any questions there? Okay. I want this to be a place where anybody can ask a question and not feel like it's a dumb question. Because there are lots of these things I didn't know until I started really diving in over the years and getting into this. So, I'm
I have a
still
question,
learning things.
what are
Yes.
the management fees?
We're going to come to that. We have a slide for it.
All right.
Great question. All right, this is the structure. If you want to talk about what this looks like, Will, kind of what this, and you're going to see Life by Design. This is the first fund that we are launching for us to invest in. And I'm gonna let Will talk
Yeah,
about
so what we wanted to do with this is obviously we wanna make money, right? Well, when you also want to mitigate risk and you also wanna invest for tax benefits. A lot of people don't, I don't know if you may know this or not, but for example, multifamily, a lot of the reason why multifamily is such a highly sought after investment is because of some of the tax benefits that come with it. And so what we really did is we really sat down and thought about how can we get sort of the biggest bang for our buck, and also mitigate tax obligations and also mitigate risk. And so what we come up with was really kind of a three-pillared approach. 1/3 of the fund will be sort of your build and sale, your fix and flips. We're gonna call this sort of our active capital, if you will, because it will be going from one to another to another to another, with distributions along the way. Sort of middle of the road is gonna be sort of your short-term rental, whether we're building them, buying them, fixing them, but it'll be a single-family rental approach, where it is income focused, but it's also easier to get into and cheaper to get into. And then finally, the third approach would be, our pillar is gonna be your multifamily, your CREs, and those are gonna offer some diversification inside the fund for risk mitigation, and then also some tax advantages on your income as well. Because on this side, if you will, you'll think, I call it capital gains investing, meaning that the money you're making is gonna be tax heavy, but it's a larger return. On this side, it's gonna be a lower return, but it's also gonna be a more tax advantaged income.
Does that all make sense? So, there's lots of investing words, that terminology out there that I have to ask Will to kind of break it down for me. Like, okay, put some layman's terms for me. So, you guys know what a fix and flip is, right? That's one avenue. Fix and hold or build from ground up. How many do you have going right now? You have a couple of builds out there. Three going right now. General contractor. That's where we can all have a way to save money as well. Some of those would be just single family rentals, short-term rentals, then we value add, multifamily, commercial real estate. So those are the three things right there. And we are looking, our ultimate goal is to raise $1 million in this first fund.
I have a question.
Yeah.
Is the income going to one of those blocks, or is it gonna be diversified into all three?
It's diversified, and we're gonna give some examples here in a minute, but you take $1 million and we're going to divide that up. I mean, this first conversation would be a third, so, 330, 330, 330.
Gotcha.
It may not exactly be that, based off what assets we have, but that's kind of the idea there, the strategy. This just continues and on with, we want to kind of outline some of the distributions, because again, this goes to not only building wealth, but it's also going to risk mitigation. You know, you don't want to go out here and get just super leveraged or which is debt. You don't want to build a lot of debt. You don't want to be exposed. And so what we're doing on the, let's call it the active cash, if you will, the fix and flips or the build and sales, be low to no debt. We're going to do that out of pocket so we can work quicker, and we're not going to be hindered by the payments on that. No distributions until we sell. So again, it's capital gains. You know, again, we'll give some examples that'll paint a pretty good picture here in a minute. The middle tier, it's called a short-term rental. We will pull leverage on that just because we're holding it for a longer term. No distributions during construction or any kind of renovation phase. but then we'll have quarterly distributions, and we're gonna put 50% towards debt pay down, because again, we want to make sure we're building wealth. And that does two things, is it mitigates your risk, and it also increases your equity. So when you do actually sell or exit, it's a nicer chunk. And then 50% to partner and distribution. Very similar on the multifamily CRE side, except we may end up actually having on multifamily, may end up going to 70%, which is okay, because you can usually get a better debt offer on that. But the distributions and the debt pay down and also to partner distribution is the same.
Questions? Does that make sense?
Mhm.
Okay, great.
Can we go this one?
Yeah, so, yeah, red label investments, so what this looks like is, here's the 1% management fee. So there's a 1% management fee, which is based on the total amount of capital.
AUM, yeah, assets under management.
Assets under management, how is that paid?
So that is annually, or it's paid monthly, but it's based on that annually. So whatever we have, say if you have $1 million, it'd be 10,000 divided by 12 payments paid out monthly.
Okay. And, how this works is when we do these and we have our profits that come in, this is what the splits look like, and I think it's on the next, we have a nice little graph on the next page there. Yeah, there you go. So 90% of the profits go to the limited partners, 2% goes to the general partners. What is the standard?
I mean, everybody here is kind of the 2 and 20, sort of coming from the hedge fund world, but 2 and 20 is even getting slim. I mean, when we first started talking about this, I even was a little hung up on it. But once Jay helped me understand that, you know, this is not a traditional private equity fund or a real estate fund or even a hedge fund. It's really built more around building wealth and helping you guys, or helping the investors. You know, I began to understand. And so, you know, taking a 10% profit splits, I mean, on $1 million, you can do the math, and we'll show you here in a minute. It's really not that great. This is really just covering expenses. Then 1% management fee is definitely bare bones covering management fees, or I'm covering expenses on our side. It's very, very favorable for the limited partners, in my experience.
Does that make sense?
Yeah, but why would you do that?
That's what he was asking me, right?
That's what I said.
He's like, no, it's 80-20 with a
Hold
5% management fee or 2%. There's another market center doing this in Houston, Texas. It's the Heritage Market Center. Jack Hawthorne, he's doing it. And so when we were sitting here thinking about this, you and I having a conversation, and maybe it's even your idea. It's like, is there something we can do with your agents? It's like, it's a great idea. Called around, find out. Jack Hawthorne, we had several calls with him. They're running their market center. They're not doing a 90-10, they're doing an 80-20, I believe, right? And a larger management fee.
Yeah.
He said it's a win for the market center because it's retention. Agents are staying. It's like, hey, if they're gonna help me build wealth, I wanna stay here. I wanna keep my business here as a real estate agent. It's an attraction for people we want to be in business with. It's like, hey, I can go over to Keller Williams and you can take advantage of this wealth building tool platform that they have over there, right? And it's just part of our culture. It's what we talk about, it's what we teach, is how to build wealth. So that's why. It's a good question.
So Jay, that does bring up a question.
Yeah.
What if you leave Keller Williams and you're
Yeah.
invested in this?
What does it say in our agreement?
So if you leave Keller Williams, it gets a little technical, but when your position will be evaluated based off the current value of the fund. And so if you do decide to leave, then you basically are cashed out at that pro rata of the fund. So for example, if you go in at say you go in at 50,000, and we immediately make some allocations, and the value of the fund's gonna drop for a minute, right? It always does. We make allocation, gonna drop, and then it'll start as it builds value, because we're not liquid anymore. You know, it's tied up in a physical asset. And so if you make your $50,000 investment and then you immediately want to come out, it's not going to look pretty for you. I'll be honest with you for a minute. But then as soon as you start getting up, you know, say we run our, and it's hard to do because it's all hypothetical speaking right now. But when we'll do our evaluation based off the current valuation of the fund, and then we can cash you out at that point. And what we may even do, and going back to the 10%, is that we may even me and Jay, Sharon, one of us, the general partners may actually buy your position. And so therefore it would, you know, help us make a little extra money, but also make you, you know, be able to let you exit as well.
Good question.
What if you retire?
Retire? KW?
Say you put your license in referral and you retire.
Yeah, I think you're still a KW associate.
Yeah.
Yep, and so we consider that. I mean, if you go to a competitor,
Right.
that's what this would be. Right. Well, we gotta make it a win for us, right? For everyone involved. Good question. Clarity is key.
Can you sell your position to another agent?
So a secondary market, it would be upon our approval, but, I mean, as long as it's within here and everything checks out, then yeah.
I considered that, but, yeah. Well, those are good questions. Some other questions on that. All right. Some completed projects, there's some past history, some recent stuff.
Yeah, so these are just some basic numbers on some new builds, you know, nothing fancy, but these are a couple of, recent build to sales that I've done. And here's a couple more, just to kind of give some ideas of what we're seeing profit wise. These are real numbers, these are not hypotheticals, these are not made up. This is a recent syndication, we actually just exited, and so this was a 655 unit value add 506C syndication that I was a part of the GP on, and so give you some numbers there, they all turned out pretty well. So this was a value add strategy. You guys familiar with value add strategy? Basically going in, fixing it up, reposition management, raise rents. And so,
So you're looking at other areas than just local?
No, no, this was just my where the recent ones that I did were at, but I think we're gonna try to keep it around here.
You know, I believe there's enough deal flow around here to support what we're doing, but we are open to outside of the area. There's stuff in Chattanooga we recently seen. Wherever there's a way to make a profit, that's where we go.
I've got an office in Nashville and Orlando as well, so I mean, we have access to those markets
Yeah.
if need be.
Yeah, yes, sir.
On that previous slide, those new construction houses, so are those, just to reiterate, are those here in the
Yes.
Knoxville area?
Yeah, every one of those in
I
Knoxville.
got you. Now, is that something that was funded with something like this, or was that just something
No,
that
this
you
is
did?
just private capital.
Just privately done, okay.
Yeah.
You do good work.
Oh, thank you. Some of them, I can tell you war stories about them though. when you're involved in them, you know how they.
Sure, yeah.
Let's see what we're doing here. Example 4 builds in a year. This is if you know if all we did was kind of go out and duplicate the 4 that we showed you as an example. Overall cost $928. If we would pull leverage on these, just because it really increases your position. But we would keep our equity up to 40%. That way you're not overexposed. So for a little over $1 million with a profit of 162, so within a year it'd be a 43% return on investment.
So that's one example of something we could do.
Yeah, we're just giving some examples. Short-term rental example. This is a real short-term rental here locally. Cost $566. Again, put 40% equity down, $226 out of pocket. Get leverage on the rest. Income's $108 a year, so that's an average of 51%. I'm sorry. Average of 51% occupancy. The 108 was. So that just lets you know that it's not like super.
And we got this analysis from iTrip Vacations, who, this is a very recent one they just did. It said, hey, can you send me the most recent one that you've done, that we can look at some real numbers. There's a very conservative numbers that they use, so we like to be conservative on things like this, but that's just one idea of something we could look at doing short-term rental.
Love to get up in Gatlinburg too.
Yes.
A smaller multifamily. This is just again an example. Roughly 1.2 million. We would raise our position a little bit to 30% equity, so raise our exposure a little bit on the debt, but you can get by with that because you get more favorable terms on the debt. Runs about an income of 162, which is an annual cash on cash of about 45%. At a 70% leverage. And again, it would be a value add. Every one of these is kind of a value add strategy, I would imagine. You know, you're creating that, it's forced appreciation is the technical term for it, and what you're trying to do there is to come in and force that appreciation and kick up the value. And if we did, this is sort of an example of $1 million portfolio. We would actually break it down in, again, this is kind of the examples of our 3 pillars. You've got your, you know, again, active income, your sort of single family rental or short-term rental, and then sort of a CRE or multifamily asset. Total portfolio value would be roughly 2.7 million. Total equity would be right at $1 million, which is what we want to see, just under. So we make sure we got a little bit of room there if we need it. Total income's 433, which is an annual cash-on-cash return of 45%. And I didn't get into too much of the long-term, like if we were going to hold these longer, get into IRRs and all that stuff. I didn't want to get too complicated on it, but just to kind of show you, you generate some pretty decent returns here. This is the reason why BlackRock, Blackstone, and all them are jumping into the smaller game. Questions?
Will there be a constant retain, of the portfolio funds as you create these opportunities and if they generate profits and you distribute profits? What part of profits are put back into the portfolio, or do you?
Into the fund.
Yeah, into the fund.
So on the active side, it will be rolling, and the profits are getting distributed. So the initial contribution. So again, let's just keep it simple: third. So say 333,000 would stay over there, and that's what will be reinvested. And then the profits are what's being pulled off the table. Same thing with the short-term rental. It's the profits from the rental income. Same thing with the multifamily. Now the multifamily is a little unique because you can actually do a cash out refi, which is a non-taxable event. So say you buy it, you do your capex or your value add, and then you get new debt on it at a higher valuation. That in between, since it's loan proceeds, it's a non-taxable event. So like that would be a what they call an LP distribution, limited partner distribution. And then, but that principal does stay in there, and it's just what keep going. But typically, this is going to be a hold. Those are going to be a hold. Those will be an active. So the initial principal amount investment, will be tied up until you make a full exit. Once you make a full exit, at that point, it may vary a little bit depending on what deal we decide to go back into. If it's within you say a 5-year window, but if we're done, we're closing it down, then the whole thing will get distributed back.
So what is your turn time? So say you're doing a short term, what does that look like, time-wise?
Short-term rentals? I mean, if it's
Well, let's go category 1.
okay.
Fix and flip it. What's your time frame to do that? 6 months, 9 months?
As far as say we.
Say you buy it, you fix it, and you're ready to flip. So
Okay, yeah,
what's your
as
time frame?
quick as possible. I mean, 6 months is ideal. I think might be a little tough right now with the subs situation, but no longer than a year. I mean, we want to try to keep everything on the active income within a year window. If that makes sense. Short-term rental, it's really going to depend on the asset. You know, if we get a decent offer on you know, exit, and say we're trying to sell it or not trying to sell it, but we get a good offer on it. Say it's a cabin or something in Gatlinburg. Somebody comes by and says, "Hey, we want it." It's you know, makes financial sense for the fund, then we'll do that. But if not, we'll hang on to it as long as the income's.
So if you sell it, who lists it?
Huh?
So if you sell it, who's gonna list it?
That's a good question. You want to talk about that, Jay?
I was not prepared. I thought about that question, but I did not prepare myself for that
You should
question.
have known better.
The drawing the straw.
Flip a coin.
I
I'll
don't
do
know.
it. I will do it. I'll do it.
Casey will do it.
I
Our
will help
general
Casey.
manager, Casey, will do it. That's something we do need to think about
Yeah.
because
Yes.
Yeah, really.
Right.
it would be great to have someone do it that's within the fund, but we need to have a stipulation of what's happening with that commission, right? Is that gonna be waived to benefit the fund as a whole? Of course, you're gonna have marketing expenses and things like that, we get that. So, you know, we need to dive deeper into that and figure out what that would look like. But my initial thought was, have someone that's in the fund, that's licensed obviously, who would list that property at no cost to them, it's just the marketing costs that are involved with it to benefit the entire fund. Does that sound fair to do that?
Yeah, it does.
Now, if someone is bird dogging a property, say Katrina, you go out like, guys, found one, like this is the one we need to really put our money into, we're like, yes, let's do it, then, you know, we could work out some sort of commission on that. I think that's fair too. So, yes, I haven't thought very hard about that. Thanks for bringing that up.
Get into the sort of tech stack behind us a little bit. So we're not keeping track of all this pencil and paper. We actually use a platform. It's one I personally use with my syndications and offerings. And so it's called InvestNext. And what this is it's a investment management software. And we'll dive a little deeper into it here in just a minute. But it's basically an online platform to where you can log in at any time. Once you make your distributions, it'll automatically tracks your position, it keeps track of your distributions, all your documents. You can log in anytime and see where your return's at. It automatically calculates that for you. It's also a communication hub, so it is our investor portal, if you will. And so far it's been amazing for me in keeping track of your investors.
Yeah, I mean, it's the CRM built in there too, so we can go in and communicate out with the LPs on what's happening or anything that needs to be known. And all the financials can be done through that as well. Of course, you can always do paper checks, but we can also do everything connected right here. It's all calculated, goes right into your account.
You can make your investment bid, and then you can also, our distributions will be all just ACH. So when they come in, I mean, just next thing you know, boom, you got a notification. You got for example, your total distribution, and then it'll just show up in your account. So it's pretty neat.
So have you calculated what the rate of return is?
Overall, again, going back to sort of
Just that.
the portfolio here, I mean, these are conservative numbers and they're real numbers. These are all three of those columns are real active deals right now that we could actually go out and perform on. I've already done 4 of them, so we could duplicate those and I could actually save you some money because we wouldn't have to buy plants. But the short-term rental and then the multifamily, those are all active deals that we could go after right now. So, I mean, 45% is I personally think is pretty conservative, especially with our equity position, keeping our leverage a little low. I mean, I could beef that thing on up if we wanted to go out and get leverage up to the gills, but that's not the right time to do that. So.
Do you have an area that you're concentrating on looking at as far as your investments?
Geographically? I mean, we want to start Knoxville just because that way you guys can go see it, touch it. I mean, you'll be getting monthly updates and you know, you can go by and see it if you want to, but depending on the quality of assets around here, may expand to Nashville would be pretty quick, just because I have an office there. I've got a pretty good network and see a lot of deals from Nashville, and quite frankly, the returns are killing it out there. And then also Chattanooga would be kind of our immediate expansion. Gatlinburg's a great place to be looking, especially for the short-term rental. So Nashville too, I mean, it's phenomenal.
Yeah, if we can raise $4 million today, we can turn an $8 million profit on a piece of property in downtown Chattanooga that we just found the other day. So,
I guess I'll skip to it. But anyway, we'll go right to it. So, Jake, you want to run down?
yeah. So in the type of fund that we have, which will be registered with the SEC, we're allowed up to 35 non-accredited investors and unlimited credited investors. And what's the definition of accredited investor?
Credit is basically $250,000 net worth, or I'm sorry, $250,000 income, $1 million or more net worth.
Excluding primary residence, right?
Yeah.
So commitment levels, this can change as far as we got, how many at 10,000 are available, how many at 25, but this can change because we gotta make sure we have enough capital raised to be able to execute the assets that we wanna do. So, but in general, this is our 35 right here, 35, we got 15 at 10,000, 15 at 25,000, and 5 at 50,000 plus. This is just for the non-accredited slots that are available. Does that make sense? Yes.
Our goal is 1 million to start with.
Yeah.
Do we not start to invest until we get that million? Because it could be a month, 2 months, 6 months. Just
Right.
kind of-
We put a 3-month window on it. So
Okay.
basically within 3 months, or from today, say 3 months, it will be sort of our allocation target
Okay.
time. hopefully we can hit that before then, but if we're not, then at that point, we could go ahead and execute. And you could still take in investments, after that, but again, getting into the technical terms here, there's a formula for how that's worked out, because they wouldn't exactly have the same share ratio as,
So are you doing it by letter of commitment, or are you just doing it and holding until you get what you need?
do what now?
Are you doing commitments from people, written
Oh, yeah, just,
commitments?
yeah.
And then when you've got enough, then everybody writes the check, or?
Yeah, so we'll show you, next on the slide what that looks like. What's next? If you guys wanna screenshot that, you can, or go to that.
Jay, I have a question.
Yes,
Can you add to your commitment, like, or once you
Increase
initially
your
invest?
position.
yeah, we're able to do that, right?
Yeah, yes, you can increase your position as time goes if you want to, yeah.
Mhm.
But the minimum you have to have at least 10,000 in there is kind of the minimum, but it's increments of 1,000 beyond that, if that makes sense.
If you'll go to the next page. What I'll take you to is this, right here, and there's a mobile version of that will pop up on your phone as well. You can sign in, register for an account. This takes you within our Red Label Investments portal, right here. And then, it'll take you to the dashboard, where it just shows, here's our fund, our Life by Design fund. This will talk about contributions, this is what yours will look like, and then the offerings. Your documents will be over here as well, any documents that you'll need to sign or review and sign. Go to offerings. This is where you do your commitment, right here. It's called soft commit, so no money's being exchanged at this point. It's just like, hey, this is where we want to commit and what we want to invest in the fund. This is how we track if we're on track to hit our goal to go out and execute. Is there anything I missed on that?
Well, I think to answer your question, we are taking commitments. I mean, we are active and live, so we can go ahead and take commitments if you're ready to go. But if you're still learning, want to learn more, or at least just show your commitment level, you can just do a soft commitment for now. And so we will be accumulating all those. We're using Pinnacle Bank as our financial partner, so that's where the funds will be held until we identify an asset, which at that time we would make notice to our investors, let them know what we identified, our position we're going to be in on it, and projections, and when our close date is. Questions?
That's it. Try to keep it simple, informative.
Can you share your slideshow?
Sure can. We have the list of everyone who signed up. If you haven't signed in, you can sign in right here. We can email this to you. No problem. One thing, that question that I've gotten before, and I think you all should know this too, is there may be some people want to pull together. Like I talked with some of the leadership team in Chattanooga when they saw this post. They called me and said, "Hey, we've got an LLC, a bunch of us already, an investment group. Could we come in as one investor?" I'm like, absolutely. So you may have people who may not have the minimum to get in, but if you want to partner with other people, set up your LLC, get your operating agreements together, you guys can come in as one non-accredited investor if you want to do that. So that's an option too.
And you said it was a 5-year commitment.
It's set up as a 5-year fund. Again, that's our expiration date, if you will, but if everything goes well and we end up executing the plan in 3 years, then that's when we'll exit. I mean, it's gonna be whatever's best for the fund, the LPs.
Now, the accredited or non-accredited investors had said 50,000 plus on the last one.
For the levels,
Yeah,
Mhm.
it's 10, 20, and then 50,000 plus.
Yeah.
So how much can you invest if you're, non-accredited?
well, as much as you want. Up to $1 million, which is a fun.
That's what I wanted to know.
Yeah, good question.
So now you're looking at whatever it was 45% rate of return or something like that, but like on a $15,000 or a $25,000 investment, I mean, what would a typical monthly cash flow look like? Like, what would someone expect to get from that?
Well, they're going to do quarterly first of all,
Okay.
Yeah.
As far as distributions go.
Okay,
Yeah.
gotcha.
It's really gonna depend on the what we actually end up acquiring. But taking that same example, I'll have to look the numbers, I have a terrible memory. Let's go back so take the same example, if you got 433,000
Mhm.
out of the year, and let's just keep it simple, say we do $1 million, and you come in at 100,000, so you have 10%, so you'd be looking at $43,000, if my math is right, in annual distributions. Be 10% of the net. It all depends on your position, how much you invest, and then obviously how much, total income you're coming in.
But it wouldn't be 10%, right? Because 10% goes to the other
Yeah, it'd be
people.
90% of the
10% of
profits.
90%
I'm sorry,
minus
yes,
the 1%.
90% of, so you take away 433 minus 43, what is that? We're on maths, terrible. 390 or something, somewhere around there. So you'd be roughly, let's call it 35,000 conservatively on $100,000. So you'd be right around the 35%. I should put that on there, this is gross at what they call the
Gross,
fund level
yeah.
versus the investor level, so this is gross fund level.
We can calculate commissions.
You guys
Only if
are
it's,
better than that.
So
only if
math
it's
I can
3%,
do.
6%, right? We got that one down,
Yeah,
at least I do.
right there, 90% of 433 would be distributed to everybody that else.
What about your investment in the event of a death? Say the investor passes away and there's no will or anything.
That's paid quarterly, so you get 1,000.
If you do this,
involved.
you need to have some sort of succession plan lined up, I will say that, that way.
So it can be passed then to heirs?
Probably not if it's KW.
Right, if it goes out of KW, so in the event of a
It would
death,
have
it's
to be paid
unique. It can go a couple different ways, but in the event of a passing, the heirs can have it, but they will be forced to sell, right? But you're not forced to sell at a loss because it's not your fault, you see what I'm saying? So,
So you can't will it like profit share.
Right.
right,
No.
but you can will the position. But again, going back to like his question, there's no secondary market for this. So like in the world of securities, you got, secondary markets. And so there's no secondary market for this, meaning that, there's not, ideally what would happen is that you would sell it back to the fund. I mean, that's what, if I was gonna invest in this, I would set it up to say, upon my passing, then, my position will be first given up to, GPs or LPs. The fund in some capacity would absorb that. That way it just keeps things clean. They get the money, which is probably what they're more interested in than the position to fund, to be honest with you. But that's what I would recommend, would be to set it up in that capacity.
Awesome.
So if I heard you right, we can invest as an LLC into this one?
Yes.
Yes.
And that's another thing too, this is set up as a pass-through entity, so any tax benefits will be passed along to the LPs.
So what happens if you lose money?
We won't lose, no, I'm just kidding.
Well,
I
just
mean,
go sideways, there's a surprise.
I
It
mean,
can happen.
that's the benefit of having a 5-year, plan.
To
is-
recover?
Yes, I mean, that would be the best answer, is if you think you're gonna invest in this and be out in a year, I mean, ideally, I personally think that it will go well. I mean, I'm doing it myself and I'm benefiting well within a year, but, like you said, in the worst case scenario, it does go south. You may lose money the first year, second
You
year,
can.
but that also gives you the third, fourth, and the fifth to rebound.
No different than being playing in the market.
Yeah.
Oh, one thing for sure, when you get into real estate is you'll spend money.
Yeah. What I love about this too, just being with real estate agents and Keller Williams real estate agents, it's we're investing in what we know.
Yes.
And I've always done that. I don't, probably bad to say this, I don't invest in stock, I don't understand it. So I don't invest in things I
And
don't
we have no
understand.
control over it. Yeah.
I know real estate, so I'm comfortable with that. I know it's a great investment, so I love that we all have a level of knowledge around that. Instead of like, I don't know where we're investing.
Well,
in,
and
here's my
even
money.
going back to the knowledge and talking about,
Yeah.
like we even spoke about, if you call and say, I mean, we're not gonna call and say, hey, come check out what we're doing on the paperwork side, but if you're interested in, say we make an acquisition on a 15-unit, 12-unit, or something like that, in multifamily, say, hey, I wanna see how you guys are doing this, I wanna see how you're gonna reposition this, where are you ordering your cabinets from, how are you getting, doing the rehabs, how are you, you know, how are you sourcing debt? Then, you know, we're opening that up too, again, to help teach,
Yeah.
you know, how to do this, cause just like Sharon said, I mean,
I'm married to a licensed contractor and we fix and flip, so yeah, I'm sure that we would wanna be,
Absolutely.
we would want our eyes on it.
For sure, and that's part of it, is it's really an open book, again, going back to like,
Perfect.
what I, you know, backing up what Sharon said, for me, I wish that I had something like this when I was jumping out there, because I was, unfortunately, in this space, investing a lot of times, the easy ones to find and become, you know, partners with or whatever are usually the snakes, you know, I mean, that's the reason why they're easy to find. And so I had my fair share of them, but luckily was able to make it through, and that's kind of, again, pushing Sharon's, you know, vision on this is from an education and wealth building standpoint.
So what, with that being said, I mean, are you, when you guys find deals or we find deals or whatever, we share, how is that, are you gonna like put together like a pro forma
Yeah.
or something we can all look at ahead of time before the purchase is made, or how does that?
Yeah, I mean,
how does that look?
you know, the decisions are made by the general partners. However, like we said, there's gonna be a high level of transparency. It's like, hey, we've identified an asset, there's a pro forma that we're doing on it, we're gonna be executing on this. And of course, using that CRM to go out to everyone, here's what we're gonna do.
Inspection came back as this, you know, our budget came back as this, our you know, estimates came back, you know, we're gonna be very transparent in the process. Through the acquisition, and then once the acquisition is made, then even through the update of, you know, you may not get daily, I really don't think you get updates as far as, you know, hey, plumbing went in today, da-da-da-da, but you will definitely get, you know, updates along the way as far as the current status of the asset, how it's doing. You're gonna get monthly reports. You know, that's the reason why we use the software, because a lot of that, to be candid with you, is it generates a lot of that for us, so.
What name were the properties? I'm sorry.
Sorry, real quick, you had your hand raised for a while.
Sorry to come in late, it was maybe repetitive for you, but, can individuals invest?
Yes,
And what's the minimum?
10,000. Great, yes, sir.
What name will the properties be in?
The Life by Design partners.
Life by Design Partners LLC. And that Life by Design is taken from our mission statement. So we're taking all of our Keller Williams mission statement, creating these LLCs.
So now, are the general partners making investments also, or are you just sitting back doing your 10%?
No, our investment's gonna be our time, right? And fund management. Yep. And we may decide we wanna kick in, you know, 10, 20, 50, whatever we wanna do, yes, we can, we have the ability to do that.
I typically on funds will kick in because it increases my position. I mean, you know, at the end of the day, it's about making money for me as well,
Yeah.
so.
Yeah, yes, sir.
I'm a little bit confused about the name that it would be in, and then this group. Are we simply the bank and it'll be in a different name? Or, I mean, where I'm going is if somebody falls off one of these buildings and get killed, are we gonna be named in that lawsuit? And I know we've got insurance and all that, but that's not gonna stop it.
You will not, because you'll be the limited partner. Now, we're on the hook for it, because we are the general active partners. As a limited partner, you are only limited to the loss of your investment.
So we could get a K1.
Yes, you will get K-1s, yeah.
Did I answer that correctly about the LLC that the property's gonna be in?
Yes.
Okay.
Yeah, so it's technically gonna be two owners how it is. So you have, Life by Design Partners will be 90% owner, and Red Label Investments will be 10% owner is the way it'll be structured. And they do that because, again, we're the active partner, you're the limited partner, limited due to the limited amount of loss that you can withstand. And we have to be the actives, and we have to be involved in it, because we'll be the ones, if there's any debt, we'll be the ones signing on the debt. We'll be the ones taking the risk, we'll be the ones making the decision, because you can't be held liable if you're not the one actually making the decisions. Makes sense. Liable other than your capital contribution.
The fix and flip, tell me again about how long you think it'll take to flip a house?
Within a year, I'll say that. That's our goal. Is every fix and flip or say we build it to sell it, a year is going to be our strike mark within a year. May go over. I mean, you know, we all know weather is
Yeah.
beautiful.
I
here
do
in
a ton of new
Tennessee,
construction, so it's never less than 9 months.
Yeah.
Never. Not.
I can run a pretty quick, we can run a pretty quick crew, but again, just with weather, sub availability, you know, it depends on how much you're running. If you've got multiple projects going on, you can tie up a mason or a plumber or a you know, whatever, you can tie up a sub longer, say, hey, look, would you go from this one, this one, this, and this one, so it depends on if we're doing a singular, or say if we have a couple going on, say we go in and we buy, you know, two houses set side by side, we can get things knocked out a little bit quicker, so it may take a year, but you're getting two for the price of one, more or less, which would, you know, equivalent to 6 months. It's all
Well, you do
economics of scale,
Do you do most of it with your employees or with subcontractors?
subcontractors, yeah.
Any other questions? Yes, sir.
On a, let's say, a flip, are we gonna look for anything that the numbers work out that we can make a profit? Or had you thought about, like, let's just buy a $200,000 home and above to flip because the numbers are better? I don't know.
We're definitely looking at what's better. I mean, you know, I know you got inner city versus, say, if we can scalp one out in Farragut. I mean, obviously Farragut's gonna be a much better, you know, fix and flip. And so we're definitely looking at, you know, geographic, you know, overall return. Again, in the fix and flip and the build and sales, that's a very, again, active role, active income, if you will. Again, I call it, you know, capital investing because it's very capital tax heavy, but, we're definitely gonna be looking at, that's gonna be what's generating revenue. You know, that's gonna be, cause again, going back to the overarching strategy of this is we want income with, you know, diversification and risk mitigation. And it's kind of two worlds that don't go together a lot of times. Either you've got good income and you're at risk, or you got low income and it's a safer investment. But we're mixing those two because we want you guys to be able to have distributions. We want to be able to pay down debt, and we also want to be able to have the tax benefits with the multifamily and the CRE.
With me being so new into this, you know, this Keller Williams is me till I die at this point. But, the initial investment with me being so new, the soft commitment, can you explain that again, when that 10 is due?
Yeah, we have a fundraising period, which we talked about, 90 days. And, our goal is to have all the funds raised by that time or ahead of time. So once we hit that, we'll notify everyone, hey, we hit the goal, we want to raise. Now it's time to submit your funds. So, within 90 days.
Jay, can someone get in at any time after that, or is it kind of closed once we reach?
Talked about that.
It would be closed, but at the same time, if, say, a position opens up, say somebody passes and a position opens up, then it would be best to market that, you know, in a, basically creating our own secondaries, which would be within Keller Williams. Somebody can come in at that time, but more than likely, the answer is no. Typically, it would be no.
But we will be able to open other funds.
Yes, we will be rolling out other funds once we get this one. We want to get this one performing, stabilized, get it running good, and but even that one more than likely will be not just Knoxville. It will open up to, you know, whether it's Knoxville, Nashville, Chattanooga, or even larger throughout the southeast. It will open up.
Can we just reinvest the profit instead of taking it?
You could, yeah, if you want to. That would actually be smart because it would increase your position. Yeah. Again, it goes back to like why a lot of times put in on the LP side. That way you're.
What does that look like on taxes? Do you pay taxes on the money you didn't get?
So going
Because
back to
you really
taxes.
don't
Don't ask me that question.
Going back, our goal, which is gonna be hard with this, cause I think we'll be generating income at a higher level than I think we'll be kicking off tax defers. But our goal is 100% tax advantaged income is the goal. That's always the goal. You always wanna make sure that your active income is equal to your tax advantaged income, which would come from multifamily, which comes through like a cost segregation. So we're gonna be looking at multiple avenues to be offsetting your tax obligation, but just to be candid with you, again, being honest, transparent, you probably will have some capital gains on this, just because I really believe it will be kicking off. There's just, with $1 million and even a third, say you take half of it, I mean, you're only gonna be getting a 1.5, maybe $1.7 million multifamily, which is, you know, what, 17, 18 units maybe, 17, 20 units, depending on that. I mean, there's just not enough there to offset 100% of the active income, but, that is the goal, but we will be taking measures to make sure that we're getting as close as we can. Like, for example, would be like cost segregation. Are you familiar with cost segregation on, multifamily?
Am not.
Okay, so cost segregation, for example, is, the structures, naturally, I think it's naturally, written off over what, 27.5 years, I think, something like that. And so what you do is you pull in a cost segregation specialist that will come in and he'll break everything down from the refrigerators to the wiring, to the flooring, to the roofing, and they say, look, this is only gonna last 3, this is only gonna last 5, this is only gonna last 7, and so what it does is it compresses the 27.5 years of depreciation into your whole period of a couple of years, and so therefore you're getting 27.5 years worth of depreciation in 3 years.
So, on the multifamily that you're holding, what happens after the 5-year fund is over? Like, do you guys, are you selling that, or is it just being held by the general partners?
No, it will be an exit. I mean,
Okay.
again, and I say 5 years is the overall, but really like year 3, we're gonna start planning. So year 3, you're gonna start planning your exit strategy, and then year 4, you're gonna, be marketing, you're gonna be making sure that you're in a perfect world, that's the way we go, would be year 5, but, here lately in multifamily, year 3, you just whisper that you maybe want to sell and somebody comes in and grabs it off your hands, so, that's in a perfect world, that's what would happen, but it would be, in year 5. Now, I will say this, if there's, say, economic turmoil, right, like it's totally going downhill, we do have an option to extend, because again, our worst case scenario would be to an exit, and put the fund in a harmful position. And so, if we do have to extend, then we will just extend, and things just keep on trucking until it's time where we can exit, but when we do exit, that's when everything will be exited, everything will be divested, and we will actually close down the entity and, hopefully have the other one set up by the time.
So how far away from $1 million are we?
So do you have any commitments yet?
We do.
Well, I mean, based on what, on this slide you had up there.
The commitments,
Mm-hmm.
we've got about 200,000 in commitments, just verbally what we've been told. That has not been put into this is recently launched. So we're 800K away from $1 million.
Oh, we can handle that in this room.
Right here in this room, you got it.
What's the reason for the 5 years? I mean, if you have a multi-year or multi-family property that's just busted, making you money, why would you sell it? Is it a tax thing? That
No,
you're
it
capturing
really
those-
goes back more to the purpose of the fund, and what this is for is, again, this is not an entity set up where to tie everybody's capital up for 7-10 years, right? I mean, if we wanted to do that, we'd go to an opportunity zone where it would be 100% tax beneficial, but, it's a good minimum, or middle ground, if you will. 7-10 years is really too long to tie up everybody's capital. 3 years, you really don't have long enough to perform, so 5 years is just a good, solid target for being able to perform the business plan and then to get everybody exited out in a timely manner.
So don't get attached to the projects.
Yeah.
Okay.
Not like a puppy dog.
Right.
It's just a piece of your retirement planning too.
To piggyback off of what you said, let's say for instance, we've got all this stuff, but there's one particular 4-family, busting at the seams. Everybody else is like, whatever. Can she buy it?
Yeah.
Can one of our partners buy a certain piece of property that's getting ready to come up for sale?
Yes,
Yeah.
but you would not be guaranteed any kind of special treatment. I mean, because again,
Yeah,
our commitment
market
is
value, whatever.
Right, it would be based off, what we're asking, what we're selling, what we get it for, comps and whatnot, and so, you could, but it would not be any special treatment.
Well, I think in the leadership meeting, you had discussed the fact that if any of our agents had a distressed listing that the partners would think we could go in and buy and rehab, that instead of it going like straight on the market, they could be like, hey, we have an investment firm within KW, let me pitch that to these people, and maybe we don't even have to worry about
Right.
all this stuff, so.
Yeah, it's another tool, I see this as another tool to take to a listing appointment, and you get the whole iBuyer craze that happened. You can call it whatever you wanna call it, but it's another option to get a cash offer on the house. That works for the owner.
We even talked about like, if that does happen, you know, give you an option, like, hey, you know, we can go ahead and transact now and pay you a commission on it, or you can basically let us do the rehab and you can have the listing, you know, when it's rehab, so that way you're getting a commission on a higher value.
So if you kept reinvesting, not taking a distribution, could you go tax deferred for 5 years potentially?
No, cause you'd be, again, going back to his question, is that we just wouldn't be able to, I just don't foresee this being able to offset. There's just not enough capital there to be able to buy a big enough piece of property, to be able to get a big enough tax, you know, advantage to be able to offset it. So I don't wanna sit there and lie to you. I mean, you know, you'll probably get some, capital gains off of this, but that's good. You know, that means you're making money. I mean, everybody fusses about capital gains, but, you know, I'm not gonna say I like it, but I do like it when I'm writing that capital gains check, because that means I'm doing something right, you know, I'm making money.
You can do whatever you want, you don't get caught.
I don't play with the IRS.
That's not good advice, Casey.
Whatever.
Sorry.
Anything else?
You mentioned the statement of Chattanooga group, right, the LLC, and you may have said this already and I missed it. To whom precisely will it be open? To
All Keller Williams Associates, yes.
in the country?
Yes, and spouses are part of that as well.
All
In the
Keller
country.
Williams in our market centers,
This is open to, well,
any KW agent.
KW Associates. We have an associate in
New York.
New York who's interested, and he's someone who came in our network somehow. I think he sent us some recruits at some point, and he's interested in doing something in this fund. So, what we could do is we could have like a Greater Knoxville only fund, right? Where it's just our people. We can have, this is the first one, so.
We've not really marketed it out to anybody, cause I mean.
Only thing about marketed to is our Keller Williams Associates, that's it, and here.
The game plan is we'd love to be able to fulfill the million here, right? But if we are shy of that, you know, we will open it up further. You know, we got some interest in Nashville as well, just from some connections, and so, you know, love to be able to raise it, deploy it, everything right here, you know, that way you be close to it. But at the same time, if we are shy of that goal, we really need to meet that goal. I mean, you know, don't do anybody any just to be shy of that, so.
Yeah.
We can definitely fulfill it by going broader.
Yeah, and, you know, the whole purpose of this, you know, like we said at the beginning, is really for our people, opportunity, retention, building wealth, and, that's our first priority for our people. Yep. Anything else? Awesome questions. Guess we need to add a lot to the slides after getting these questions, right? That's what this is good for. So what's next is, that's our website. That's not the Invest Next thing. That's our website, which is what we talked about, information. We should probably put the slides up there or send it out to everyone who came today. And you have the link to the Invest Next portal. If you're ready to go on, just create an account. You can even do that. If you're ready to create an account and do a soft commit, you can do that as well. If you're ready to do a financial commitment, this is not tied to our bank account yet, is it?
It'd be this week, it should be, so
This week.
by next week, we should be able to actually facilitate a transaction on there.
Yeah.
We gotta get it connected to Pinnacle.
Yeah. That's it.
So what's the deadline for getting the money?
90 days.
90 days.
And this is not going on open market,
Sooner they
just
know.
KW Associates only, correct?
Correct. Yeah.
Or we could talk to someone that we're trying to recruit as a tool.
But obviously, if you guys get the commitment in 30 days,
Oh, yeah.
you're
this
gonna
is-
be ready to rock and roll, and you're gonna let us know and say, hey, you're
Better, yeah.
Yeah, we're not gonna drag this thing out. We want
I think
it
if
in
we're-
return as quickly as possible. Yeah.
As early as say end of next week, we will be facilitating transactions, if that makes sense, as far as accepting actual commitments.
Do
Not
you have
just
some
soft
properties that you've got in sight already?
Do what, I'm sorry?
Any properties that you have in sight already?
Yeah, I mean, we're looking every day. He has a stream amount of deal flow coming to him constantly, of opportunities. So, yes, we have a lot of off-market opportunities out there.
I have 2 acres on Brooks Avenue that I'm glad to subdivide.
See?
That's
what we're talking about.
So, yeah, no, there are restrictions.
Yeah.
Oh,
You all have already,
In the city of Knoxville.
you may have already answered this, so I
Oh,
apologize.
good.
But, so you mentioned new construction is something, so is it, are you going to decide like which type of investment property to get first? And it just has been decided, or you wanting to do a little bit of all of them?
Yeah, so we have 3 different buckets, right?
Okay.
Got the new build, or flip, renovate, short-term rental, or, single-family rental holds.
And it's all
then
simultaneous,
commercial real
right?
estate, and yes.
All happening at the same
Yeah.
time.
Yeah, all happening at the same time.
Again, for diversification
Yeah.
of the fund.
So for new construction, do you already have a builder?
General contractor right here.
You are the general contractor?
Yeah.
Oh, I see, okay.
He's got what, 2, you said 2 you're working on?
3.
3, yeah,
Oh, okay.
yeah.
I've always.
I apologize, I'm sorry.
No, you're
Okay.
fine. I got licensed maybe 2012, and what I build mainly now is more my own stuff. It pays to keep the license up. But again, adding value back to this, it's a resource. I mean, I hate to say it this way, but why pay a contractor, a 30% margin when you can do it and, save money?
Do you have a project foreman that you use?
Yes. Yeah.
Any last questions?
Are you willing to open up to other general contractors if the opportunity is there?
I have a
Yeah, I
problem
mean,
with that.
absolutely. Like I said, to us, it's about, you need a track record, you need quality, but then also it's, I hate to say it this way, but the depleted fees, you know what I'm saying? We can't, again, our main objective is to making sure it's our fiduciary duty to the fund. And so we can't, knowingly, if we have the equals and one's 10-20% higher, we can't go with that if they're equal. But if they're equal and they're at least equal to our fees, we'll match them. Absolutely. I mean, that would save some headaches, so to be honest with you, but absolutely.
So with the new construction, do you foresee Keller Williams like eventually having like KW like neighborhoods that we have?
I like the way you think.
Well, I mean,
Yeah.
is that something, just coming from new construction before going into general, that I feel like could be a really awesome opportunity, not just for us, but like for the agents to be able to.
Yes, answer is yes to all of that. I see there's so many opportunities out there. We talked about beforehand, what I would love to do at some point, 99% of Keller Williams market centers do not own the office space that they're in, they lease, right? Because of the profit model that we have and all of that. Love for this fund to be one that goes out and purchases an office building, and Keller Williams is the tenant, right? Or at least one of the tenants, because we're profitable, we pay our bills, it's a solid tenant, we know who that is. And so, I just think there's all these different possibilities and opportunities out there. I love what you're thinking, like let's go ahead and have our own new construction segment, right?
I mean, because that's what, basically what Southland's doing is they're really the only way that they're killing it is just the new construction. So I'm like, if we had that too, I mean, you couldn't touch.
Southland's with Smithville.
Yes. Yeah, but it's just,
Yeah.
new construction, when you're, just coming from a builder, if you're in that, it's like, it's a lot of work, but it's still just like.
It's systematic too.
Yes,
That's the reason
yes.
why, something colleagues will say, why are you still doing it? I was like, well, really, because it's checks and balances, with the inspections. If you're meeting inspections, you're getting green cards and you're getting your OCs and you're selling. So, it's very simple with your subs. You can say, hey, look, if you don't get a green tag, you don't get paid. It's very simple. And so it's a system. It's a matter of 4 or 5 inspections been on residential, and it's systematic. And so yes, it's scalable. That's the reason why a lot of them, it's the reason why you see somebody doing it. Smithville, D.R. Horton, but the problem I have with development on a large scale, and the reason why I'm recommending single family right now is because of the way you get paid on developments. I've been in developments before, and majority of the time you're working off line of credits or you know, borrowed money, if you will, and you are typically one of the last ones to actually get paid.
So that's a question I have too, is cause one of the lenders that I work with most, they have a construction or perm loan where it, like, if the buyer goes under contract, as long as the builder has gone through their process, then they do a 30-day close. So they close before it's built, the funds, so the funds are in escrow and everybody's, like, they're locked in, everyone's paid and they just pay interest only until it's done being built. And as the builder, you get paid out for certain periods, just like you would with a regular construction loan, but they're not having to re-qualify every time.
It depends on if you're doing the horizontal and everything, you know, like the ones I've been involved in, it's raw land, we gotta go through entitlement.
They wrap the land in, but sorry, I didn't even,
No,
I
you're fine.
forgot that.
But, you know, you're outlaying so much capital in just the horizontal and the infrastructure, getting everything ready. I mean, you have to sell 3/4 of the property a lot of times just to break even, and then you catch the last, you know, quarter or third, if you're lucky, on the rearage is where you actually make money. And so, again, going back to fiduciary duty, if it's my capital and that's what I want to do, it's one thing, but making sure that we're trying to mitigate risk, personally, I think it's just a little too risky right now to do something like that. But, for example, I've got some colleagues that are doing smaller developments in Nashville of, say, you know, 5-7 tall and skinny type deal. Phenomenal, they're killing it. I mean, they're making millions of dollars on stuff like that, but it's all relative to size and amount of how much front-loaded capital is required.
2.5 acres on Bird South.
Supposed to propose
As many as you want, I don't know.
Well, we have builders around here looking for land like crazy, so it's an issue, especially in certain counties.
Which is of course why Nashville went to the tall and skinny, right, RPGs, because these are, by and large, they're built in an urban setting. Aquafriend that just listed 2 of them, and it's amazing, and they're gorgeous. I've toured some of them when I'm in Nashville, they're amazing.
Yeah, and you can put them on the side of hills.
You can put them on the side of the hill. I mean, you can put, you know, 3 of them maybe in, you know, somewhere in North Knoxville, and 4th and Gill, whatever, there are lots there that definitely would hold 2 of them. You know, I love them. I love them. I have one of my sellers, right, that builds, and she's chomping at the bit to get approval to build them.
Yeah, I mean, that's
Chomping at the
definitely
bit.
down here.
She
Sure.
still has several lots in Park Ridge.
Yeah.
They'd be perfect there.
Mm-hmm.
They'd be perfect there.
Or the 2 acres at Case.
Okay, 2 acres.
Thank you all. We appreciate you coming, taking the time out. You all have my number somewhere. You can look on the MLS and find me, my cell phone number. If you have further questions after this, something you want to talk about in private, that's completely okay. Give me a call. And if I don't have the answer, I'll get it for you. So we're ready to do this. We're excited about it.
Awesome. I'm interested. I got to see what my financial planner says.
Yeah, there you go.
See how much money.
I do, yeah.